The FOMC meetings, the Federal Reserve issues reports about 6 times a year, and there's some great short-term trading opportunities at that time of the year. The FOMC report is issued here. This is what happens prior to those federal meetings with stock prices in America, in Germany, throughout the world index. The Fed speaks. Prior to the Fed speaking, you want to take a buy signal in the stock market throughout the world. Now, there's another cycle it looks like over here. We've tested this. We haven't found it as reliable as buying about 5 days before the Fed announces their report. Now, the Fed has their meetings. Usually it's 2 days, but you don't want to buy on the first day. You want to count the day they release the report, go 5 days back from that. That's the FOMC 5 trading days prior to the release of it, not calendar days, but trading days. That's been the seasonal sweet spot of the FOMC trades in the marketplace. You may want to return stock returns over the FOMC cycle. Fed meetings report done at Northwestern University, also an author from UC Berkeley, did it, talking about this huge influence throughout the world based on these Fed meetings. So, hey, their game is rigged, right? If the Fed's going to speak, shortly before that, prices usually have rallied. How much usually? We'll see with our next clip. Generally speaking, you want to buy in the opening the 5th day before the FOMC report. And there's the equity curve of it up to the last trade. Pretty good little equity curve, except, let's see, Harry, where we can go here. Yeah, sorry about that. We just had an FOMC trade because they're going to have a meeting coming up here the end of September. So this is an actual system we trade at TradeStation mechanically. I don't know if it's long or short. I look at it occasionally. Look what just happened. We had a Fed buy signal on the opening Friday. You can see the other signals we've had in it. So there's 5 days, about in the opening, the 5th day prior to the Fed meeting. Nice. It happens even we tend to get a seasonal rally in the market as well, and price structure is congruent with the seasonal pattern. So there's the last Fed model trade. You can take a look at that and see what, watch me make or lose money. I'm in the trade. The only thing I know of that would have gotten me long Friday, I don't know if anything else would have done that, other than the fact that we're 5 days before a Fed report, a Fed meeting. A lot of strong bullishness. It lasts a couple, 3 days. I will be in this trade. If I get a highly profitable opening on Sunday night, I'm out of it. I'll be happy because I bought it to sell it. I didn't buy it to hold on to it. Pardon? SA. Here's the Fed model trade right here, where we just went along. I have some other patterns I bought over here, other stuff. This is just an automatic system that trades in TradeStation. A couple of you trade it with me. We just take the signals and, whatever happens is what happens. And it's been pretty profitable. We do one in the Russell Index as well. And it's, I'm sorry? The stop? The what? Yeah, the stop, you'd want to use a stop loss of about $1,900 in the S&P, somewhere in that area. So that's another simple way, a nice little trade. I just wish that the Fed met more often. Instead of 6 times a year, right? So it's a nice little Fed trade. And yes, please.
3 days that you're getting out after the report, 5 days before the report, and then
I want to buy about 5 days before the report, and as soon as I got a profit, I'm going to get out of it. Yeah, I'm going to wait a day or so, but that's it. Man, anytime you can get into and out of the S&Ps without unscathed, that's a major accomplishment in life. So I don't wait around too long for that. Okay, so there's some other little simple trades I'd like to share with you. These are some really powerful, easy to trade trades. Holidays. Oh my gosh, there's trades for the holidays. Art Merrill first wrote about it in 1968. In his book, he said the day preceding a holiday is usually a good day. The market's risen 2/3 of the time. In the case of a long holiday, the market has risen almost 72% of the time. These ratios are highly significant, exceeded by chance only once in several thousand repetitions. In other words, stock prices are not random. A lot of times they are random, but they're not always random. At times they're not random at all, especially around holidays. Holidays are emotional time periods, and there's a lot of ways we can use holidays for short-term trades in the marketplace, since we're in the trading aspect now. If we look at the holidays by month, well, a couple things stand out. There's a holiday in February, Martin Luther King holiday. It used to be President's Day holiday, not done so well. The Labor Day holiday, not done so well, but the rest of them have done really well on balance. Right at the first of the year, that's the tax time one, and November and December have done very well. But there's another depth we can take this to, as you'll see in a moment. But let's look at the holidays in the S&P's holiday by holiday. If we sell on the third day after the new year, you're actually going to make, in the last 11 years, 10 of those were successful, net profit $6,000. So right after the market opens, wait 3 days and start to sell, 3-4 days, and that's been the profitable time period after New Year's Day. So the markets start to rally a little bit, then they come down right after the first holiday of the year. If you want to be a buyer, there's a buying opportunity following the next holiday about 3 days before the holiday. And that tends to be typical. The Martin Luther King holiday, look at all we saw in February, he didn't make much money. 1 day before the holiday, in the last 16 years, 13 times has been successful, but you only made $2,000 on 16 trades. The average profit per trade is not very high there. So the Martin Luther King holiday has not been an emotional time period in the market. We need a lot of emotions to make these trades work. People are really happy about, oh, it's the 4th of July, it's Christmas, some reason to be ebullient about your view. President's Day, that's 3 days before the holiday, 15 years, 15 winning trades, 16 years. That's been a pretty good trade. Good Friday has been a really strong trade the last 15 years, $12,000 profit buying 4 days before the holiday, buying 1 day before the holiday, 15 out of 15. And it's always been that way. It's a really strong, powerful holiday. People are bullish, and we see that expressed in higher short-term prices around the holiday.
Are you buying the opening the day before the closing?
Yes. You know, the computer has to buy automatically. It's buying on the opening, the night session opening in the S&Ps. But we're traders. Use your head a little bit. Figure out where you want to get in, where you want to get out. Basically, we're buying on the opening and getting out after being in the trade 1 day here, with a couple exceptions I'm going to show you. Memorial Day holiday, in the last 16 years, 13 of those have been successful. Not particularly good, though. It makes some money, but not a lot. So it's not a holiday in the stock market to get exuberant about. And the sixth one is going to be the 4th of July. That's a holiday to get exuberant about. Buying 5 days before the 4th of July. 93% of the time that's been a successful trade. Profits about $6,000. And I remember trading the 4th of July trade way back in the 60s, in the last century. It's always been a good short-term rally in the market.
And when are you getting out of these trades?
A day, wait a day, get a profitable opening, get a profit, get out of it.
The profit on open or close?
Yeah, if it opens profitable, I'm going to get out or have a real tight trailing stop in it. Absolutely. Labor Day holiday has not been a particularly good holiday. 3 days before has been the best. 16 years, 13 of those were successful, about $4,000 profit. But we see that little emotionalism around the holidays. Oh, here it is. Oh, Thanksgiving. Oh, this is such a sweet time of the year. This is a trade you option guys are going to milk in a variety of ways. My friends from China are going to take this trade as well. Here it is. Buying 2 days before Thanksgiving in the last 17 years has been successful 17 times in a row. Buying 1 day before Thanksgiving, $8,750, 17 out of 17 winning trades in a row. Those are great numbers. But think about this for a moment. Is there another way we could use this trading strategy? Think about it. Well, what happens at Thanksgiving? What happens the day after Thanksgiving? Black Friday. What do people do on Black Friday?
Buying stuff.
They run out and buy all the junk from China. Guess whose stock rallies at the American Thanksgiving? The Shanghai Index. The Shanghai Index rallies at our Thanksgiving because Chinese, oh, they buy all that junk from us, good. And their market rallies. And somebody else hit it on the head too. When we buy all that junk from China, where do we go buy it from? Walmart. Walmart has a pretty good little tendency to rally around Thanksgiving, believe it or not. Isn't that interesting? If we look at Walmart in the last 37 years, it's rallied most of the time, 4 days before Thanksgiving, it's rallied 37 years in a row, it's rallied. Buying Walmart, actually these numbers are wrong because they're a year old, so you have to add last year in, it's now 38 years in a row. Walmart has rallied at Thanksgiving. Could you option guys do something with that? You could probably write a short-term option on Walmart, right? Or buy a short-term option, whatever you do. Clearly, there's an advantage in the game at Thanksgiving for Walmart, for Target, for Nordstrom's, for Starbucks because they go out and buy coffee when they go shop. They're so tired, they got to have a little caffeine. A lot of consumer stocks rally at Thanksgiving. And what I like about this is just perfectly logical, isn't it? It's like, yeah, why didn't we get this one sooner? Of course Walmart's going to rally at Thanksgiving because investors, what's the news of the day at Thanksgiving? Retail sales were up. Everybody's going to, they show pictures of people buying stuff at Walmart, right? That permeates through the investment society. Oh, they were lined up at Walmart. Some lady shot somebody at Walmart one year because they couldn't get a Cabbage Patch doll or something. Like, oh, shoppers are crazy on this day. And it becomes the news of the day. And the average investor, oh, Walmart, Christmas, yeah, go buy Walmart. Boom, 38 years in a row. Is that powerful? That's incredibly powerful trade to have in the marketplace. The only one trade you need for the year. You know, that's a great trade. So there's the Walmart trade for you. And it has legs to it. The Shanghai Index rallies then. Our markets rally then, and other retail stocks also rally at Walmart. So, happy Thanksgiving to you. There's your Thanksgiving trade. Please.
Do you count a shortened trading day like last Monday, Labor Day has, you know, a short trading session? Do you count that as a trading day on these trading day numbers?
I'm going to repeat the question. It's a great question. Thank you very much for asking that question. What do we do about holidays? How do we count holidays? And it depends because your data providers they all do something different. Her question is this. The market's going like this, it goes like this, and tomorrow is a holiday, and the markets trade, but they don't really trade, do they? They have a little day like this, and not much happens. It's a holiday, and nobody's paying much attention to the market. Then the next day, it's a trading day, and maybe the market does that. And maybe the market did this on this day. Okay? Some data providers show the market like this. Most data providers and the exchange take this day and put it into this day. So this day looks like this, and this day disappears. So you better understand your data provider as to how they handle holidays to know how many days before a holiday. In the test that we did it this way. So the holiday gets phased into the next day. And of course, we're counting back a number of days. We want to be a buyer 3 days before the holiday. That's pretty much known in time. But you need to know how your data provider handles holidays because frequently you get maybe a big holiday and this day is up here, but they put both of them into this one big block day. And people go, what happened? Where'd that day go? That day just disappeared right off the charts. That's the way the exchange does it, which means it's the way most data providers do it. Why is that significant? Because that's what most traders are looking at. You want to think about who else is looking at this chart. If most traders are looking at it, well, that's probably how I better look at it. So if your data provider is going, Okay, there's a day, there's a holiday, there's a day, there's a day. Well, not many people are looking at that day that way. So we really need to think about that. The other problem you can have as a short-term trader is this, become more of a problem recently, by the way. Again, where you need to know what your data provider is doing. Market closes here, like that, and you close above a 200-day moving average, and that's your buy signal. When the market closes, we call this the closing price, okay? But after the market opens in the next session, so now the market opens and maybe it opens above the 200-day moving average, so that's our buy signal. About, depending on your data provider, maybe 45 minutes after the market's opened, the data provider says, oh, we now have the official settlement price. That price disappears, and this price comes on your machine. And you did not close above the 200-day moving average. You closed below the 200-day moving average, and suddenly you don't have a sell signal or a buy signal, whatever the signal was. So you need to know how your data provider handles closing price versus settlement price. And most of them do exactly what I just showed you. NinjaTrader does it the most. That's a real problem, which means in developing a system, you better make certain that your system is developed so it takes this into consideration, because your systems are using settlement price. That's the prices we have back in time. They're not using closing price. But you have this problem where it's no man's land. Suddenly the market, I got a buy signal, and they go, whoa, the buy signal disappeared. Why? Because the closing price became settlement price. So you really need to, that's one of the problems. It's a high-hanging fruit. They keep changing the closing prices on you. You're literally playing pin the tail on the donkey in a room with the blindfold on, because they just keep moving the donkey around. You don't know where the settlement price is going to be. It's another thing that makes it difficult for short-term traders. But now you understand holidays, and that closing price can change once we have the settlement price. Oh, Christmas, of course. We have to talk about the Christmas trade. Another good time to be bullish in the market. In the last 17 years, had you bought one day before Christmas, the S&Ps, you made $10,000, 17 trades in a row. We're winning trades. You take that back in time, you'll find an equally high number of winning trades in the market. We all get happy around Christmas, and people talk about Christmas sales. Good times are coming, the end of the year, all that. Art Merrill wrote about it in the 1960s. Marty Zweig wrote about it in the 1970s. It's been a great trade. To look for buy signals, you have a strong short-term bias as a short-term trader. A couple days before Christmas, take buy signals. So let's talk about the future a little bit. This is what I think it should happen this year. Quite a few of you got this. This is my forecast for 2015. The red line said we should have a top about March 24th, a buy about May 14th, a peak at 625. We actually peaked 623, a low on August 24th, and another buy coming up August 29th. And I think this is where we are in terms of the market now. This is based on a convoluted bunch of cycles. It drives me crazy to do this stuff, but I'm really passionate about it. So I think this is where we are. We're right in this time period of the market. This is how I do it. I look at the 10-year pattern, 4-year pattern, 20-year cycles, 60-year cycles. I look for cycle matches to try to find when things look now like they've done in the past, and then average that on out to see what it looks like in the future. One of the most interesting ones I ran across recently, apparently there's a 7-year sell pattern in the cycle. I ran across that reading Pravda. Most of you probably don't read, you know what Pravda is? It's a communist newspaper, right? The Pravda says America's going to crash because of the 7-year cycle. And they've got all figured out. It looks like, well, pretty scary when you look at it. Like, we're going to crash right now, October 2015. That's when the commies say that America's going to fall apart. They're really interesting. Well, I went back and tested. There's been some really good sells, and there's some that haven't been very good sells. So it's not a be-all, end-all. We'll see what happens, but I don't pick up on it. But I look at all those cycle matches to get it. Well, the current cycle, some of you haven't know that we've come down into here. We bobble around the 1st of September, and then we should rally. And I think we're in a rally phase the rest of the year. Cycles look good. I began working in my forecast for 2016. Started a couple of months ago on that. I've just about got the S&Ps figured out. It looks like we have a nice sell signal coming April 2016. Pretty good sell signal coming, and then we come down and rally. But I'm not complete with the forecast, but there's kind of a precursor of the forecast report for you of what I think should happen. So kind of a wrap up on trading strategies now. You're looking for conditional setups in the market, then look for a trend change in the market. You can use a Keltner band closing below a Keltner band, especially at a seasonal low, because we should pick up that seasonal low. The seasonals are incredibly important. The best trades are going to come when the market is stronger than the seasonal pattern. Just focus on those trades with a couple setup tools. You're going to have a much easier life as a trader in the market versus a long-term investor. So with that, let's toss it open, see if there's any questions about what we've gone over, or comments, or anything at all. It's a good time. I know some of you have planes and trains to catch, so I understand you leaving. Thank you very much for being here today. Hope you enjoyed it. Way in the back of the room.
Have you ever looked at the sports events like Super Bowl, the baseball, Sunday, Super Bowl?
We have looked at that, yes, and we found nothing there. No, nothing at all. Nothing consistent.
What about the Jewish holiday?
Pardon? The Jewish holidays. Well, that's been tested forever, and there tends to be it was stronger in the old days when there are more Jewish traders trading. But now we have traders from India, Japan, China, so the Jewish influence is not as strong as it once was. It's probably there a little bit in the data, but it's not as powerful as it once was when Wall Street was basically a lot more Jewish people trading it than anybody else. But now we're a whole world trading this thing. My friends in China and Australia and Italy are trading our market. They're not Jewish. So they don't recognize the high holy holidays like the Jewish community does.
What about full moon voodoo? Is that still
Full moon voodoo, oh boy. Do you really want to know about that? Turn off the cameras. Now I keep it running for a little bit. If you're interested in knowing about full moons and the influence of stock prices, where are we going to find out? Who's going to tell us the truth? The Federal Reserve. The Federal Reserve has a paper on it. And I would suggest you read that paper, and you'll find that, in fact, there's a lunar influence to stock prices. I've done that in another presentation maybe we'll make in the future, but yeah, there's a lunar influence in stock prices. It's hard to make a lot of money at it because it's not a boom every single time. So we filtered a little bit with trading day of the month, and maybe the market's been in a downtrend, but yeah, there's a lunar tendency to rally. Not quite like the Federal Reserve reports it, or actually the biggest paper's done at University of Michigan. And they said there's a bias, but you can't trade it. Well, I go, well, I'm a trader, I can find it. If it give me a bias, there's a way to trade it, but you want to be a buyer a little bit before the full moon is what I found, on balance. Yes, please.
Larry, when you say buying before the holiday, you're talking about buying S&P E-mini?
Correct. Now, in the course material you'll get, we're going to have those holiday trades for bond market and for the gold market. So when you go home and get your material, make certain you look at that, because there's trading opportunities clearly for the bond market. Bonds are unique in that we have a bond trade at Columbus holiday. The bond market's closed on Columbus Day. The other markets are not closed. So the bond market has a unique holiday. There's a trading opportunity there, and there's a great trading opportunity for bonds and stocks. It's not a holiday, maybe it should be. April 16th, tax paying day. April 15th, 16th, year after year after year after year, prices come down and rally April 15th. Maybe, Harry, if you can go to my chart, we'll pull that up. We'll look at the S&Ps in April this year, and then if we can see the seasonal tendency there, you can probably do the chart that we have on there. There is a dynamite short-term trade for you year after year after year. People pay taxes, and you'd think there's no money left for prices to rally, right? But as soon as taxes are paid, the pressure goes off the market, and away go stock prices. So, Harry, let's go back to April. There we go. Oh, there's my tax time trade right there. Automatic trade. I want to be a buyer right around the 15th, 16th of the month, and we get a rally in the marketplace. See, our seasonal pattern is this line, and look what happens with the seasonal. Usually right around tax time, we rally into the marketplace. So there's another really good short-term trading opportunity. And you know, you don't need many of these. You have Thanksgiving, you have Christmas, you have April, you have the 4th of July, you have New Year's trade. You got 7, 8 really nice trades. There are 9 holidays every year. About 5 of them are really powerful. You have a tax time trade, you have plenty of trading opportunities. Most people way over trade. They're trying to make money every day. They think that the big earthquake is going to happen every day. It isn't. It only happens occasionally. So trade less. Be very selective in your trading opportunities. Yes, please.
Is there some tell in the market that it's getting unstable, like when the market makers invoked Rule 48 recently and took over the market and did margin calls on everybody and had fun?
Well, Rule 48 margin calls comes when we have crashes.
Yeah.
So what causes the crashes? I don't know. But we knew we wanted to be a seller on June 22nd of this year prior to the August 24th crash. So some of that's known cyclically speaking. But why? I mean, I didn't know it would be like it was, but there's a lot of cycles that suggest, like the 2017 bear market crash at least, we're going to have that. But as to them rigging the game, I don't think so. 2 really important, interesting stories in my life. Years ago, my secretary called me up and said, Larry, there's a guy he has a strange accent. He says he's from Switzerland. He's got to talk to you. He's with something called Credit Suisse. So I know who Credit Suisse is, right? So well, I'm in charge of the gold portfolio of Credit Suisse, and we would like to hire you to tell us what gold will be doing. And I was going to ask him about the price of gold before I got the phone call. He's going to pay me. Let's go. Oh, well, let's talk about this. They don't know either. When we had the specialist, my dear friend Bill Abrams, the specialist, one of the big bookmakers on the floor, Bill would call me and say, what are we doing down here today? He was clueless. So the market's not as rigged as we commonly think. Will people rig the market at times? Absolutely, you bet. Whenever there's money involved, somebody's going to try to cheat. Whenever there's a football game, somebody will deflate things. Right? That's life. So yeah, it goes on. But I don't think it's quite as common as we think that it is. So those things happen, deal with them. It's an imperfect world. I just accept it. That's all. Please.
Holiday trade, when do you hold longer than 1 day for first possible?
For a day trade? Well, I'd like to try to hold a trade for a couple, 3 days because trend is the basis of all profits. Think about that. No trend, we'll never get a profit, will we? So what causes trend? Time. So time is our great ally. In the world of law, time is of the essence, and it's got to happen right now. But in our world, time is the great ally. So I want to try to stay in a trade as long as I can to capture trend. That's the day trader dilemma, no time. So I would like to stay in that as long as I possibly can, trailing stop, or if I get a nice target, take out and go out of it. But I like to hold trades overnight because most of the movement happens from the close to the next day's opening. That's where movement takes place. So I'm a holder as opposed to get out at the end of the day. I like to hold over. Please.
How are you managing the closing and to the settlement with TradeStation on your
I make certain that the system isn't acting exclusively on a closing price.
How long are you waiting? How long?
Doesn't matter because the system is not based on the closing price. It doesn't matter. I'm not using a closing or a settlement price. I had to eliminate that. So I don't have that problem. Did I see a hand up back here? Yes, please.
Any relation after Triple Witching Fridays?
I'm sorry?
Triple Witching Friday?
Triple Witching Friday.
Yeah.
I don't know anything about it.
You never...
Nah. A lot of people have led to a lot of things. Sometimes you rally then. Sometimes you decline then.
Not consistent.
Nothing that I can find consistent. And maybe, you got to remember, That's just me. I don't certainly have the answers to all this stuff. So I couldn't find anything. Maybe somebody else has found something. I just couldn't find anything because I like consistency. It's got to be consistent for me to trade it. I couldn't find it. Please. Let me get back so I can hear you and we'll get this.
Yeah. For your trading day of the month and trading day left in the month, just to clarify, you're skipping over the holiday days. So if you're saying buy 7th trading day of the month and there's a holiday before that, you'd be actually buying the 8th trading day. Is that correct?
I think I understand the question, but if I say it wrong, let me know. We're looking at trading days of the month. Most months can have up to 23 trading days. The problem is some have 19, some have 23. So one of my strategies is to look at trading days left in the month. All trading days have 1 through 15 at the first of the month, but they vary at the end of the month. So we started doing it where we look at the trading days left in the month. So February is equal to May. With a holiday, we don't have to look at trading days left in the month. We're looking at trading days before the holiday because that doesn't have anything to do with the end of the month. So I'm not concerned about trading days left for a holiday. I'm concerned about trading days before the holiday. Does that answer it?
Yeah, kind of. But even for a trading day of the month, like you would just skip over.
Oh, for first trading day of the month?
No, for just a trading day of the month.
Right.
Play, you just skip over the holiday. You don't.
The holiday doesn't, it depends on the data provider,
Yeah.
right? But if the data provider puts it into the next day, we count that as our day.
Okay.
You know, traders don't realize all these little things going on in the marketplace. They see an ad for Forex trading and they start trading, and they really don't know they're trading kind of blind. How many are Forex traders? A couple? Careful of that market. The trouble with Forex, they'll give you what, 40-to-1 margin? Well, I have more respect for people selling cocaine on street corners. Somebody give me 40-to-1 margin, they say, when are you going to blow up? You know, it's a Russian roulette, there's a bullet in the chamber. They give you way too much, and it's an unregulated market and the commissions are higher than I pay trading Globex or ICE. A lot more commission cost. So I'd say there's a better market to trade than Forex market. It's not the market they tell you that it is. Oh gosh, well, we're close to 5 o'clock. I hope you've learned how to trade, that we need set up trades and we need trend change. We've got some great tools to tell us when trades are set up. Those are for traders, those who want to invest. It's real easy. Find the 5 lowest price stocks with 12-month forward PE and roll them every 3 months. Is that simple or what? So much easier. So I'd like to thank you very much for being here. Enjoyed it. Thank you. Thanks very much. Thank you. It's great to see so many of you. Appreciate it. I'd like to thank Harry for being here. Above all, thank my wife Louise, because without her, this wouldn't happen. And to each and every one of you, I say good luck and great trading. Thank you so much for being here. And I'll hang around. If you have questions, come on up. If you'd like to make comments with TV guys, I would really appreciate that. Hope you've enjoyed the day. And get ready, because Thanksgiving's coming.